You have built wealth like real estate, investments, a business, and a bank still turned you down. This video, it's for you. Most people think that rejections, it's something's wrong with them. It is not. Most banks measure taxable incomes when they do qualifications. It is not based upon the wealth. And if you have been doing things right financially, those two numbers usually looks different. I'm Lee Chang with General Mortgage Capital Corporations, or in short GMCC, licensed in 49 states. 20 years in business, I've helped over 2,000 families. I help clients that being turned away from banks. I close clients other lenders turn away. If you're thinking that this sounds like a workaround, they are not. These programs are properly designed for borrowers like you. This is happening to a lot of high net worth borrowers, more than what you realize. They are waiting, they're renting longer, they are liquidating assets that they never have to touch. And the worst thing, they have to pay capital gain tax. I'm going to show you how Bank 2 is broken for wealthy borrowers, how specific lenders helping qualify borrowers like you, and existing programs that's available to help you. By the end, you will know which one best fits your situation. Your wealth speaks for itself. You just need a lender to know how to listen. Banks qualify borrowers based on their taxable income, which is W-2s and tax returns. Business owners and high net worth individuals legally minimize their taxable income. These two goals are in direct conflict of each other at the mortgage desk. Your accountant's job is to make your taxable as little as possible in the eye of the IRS. However, your banker's job is to make sure that you have the higher incomes to cover all your debts. They are working against each other, and nobody's told you. The same strategy that your accountants works to lower your tax bill, it's what's killing your mortgage applications. So if you are business owners or someone with significant assets or investments, your tax returns is the worst thing to hand it to a bank. It's not because you did something wrong, but because you did something right. The fix isn't better tax, but it's a better lender. Now that you know that the Bank 2 is broken, what matters is we have a different tools. One that was built specifically for how wealthy people hold their money. Asset-based qualifications. The right lender does not look at your tax returns or your W-2. What they use to qualify is your assets, your investments, your real estate, or any other verifiable assets. They look at your verifiable assets like liquid account, checking, saving, stocks, your brokerage account, your 401ks, your IRAs accounts, your real estate investments, and any Bitcoins. Some of them do use the Bitcoins. They calculated the income based on all these assets, not your income. Your net worth becomes your qualifications, no W-2s, no tax returns, just your actual financial pictures. Let me tell you a story about my client. She's a divorcee living with her son. She's been wanted to purchase a home at the current school that her son's at right now. However, the price point in the neighborhood is a bit higher. Her income alone does not qualify her for the mortgage at that price point. I ran multiple options for her, but what stood out is the asset-based program. She kept most of the retirement and divorce settlements assets intact and put down 40% down payment to purchase the home. The payment is still affordable and the reserve is being preserved. She bought a home without being in fears of the rents being increased, and her son is able to attend the same school as it used to be. Grandparents can actually visit them anytime. She thought she couldn't buy a house, but she could. It's just that the bank programs does not deter. Your wealth speaks for itself. So if you have a significant liquid assets, investments, or real estate, you may already qualify. Not on your income, on your wealth. You may not necessarily need to liquidate anything, and you do not need to liquidate anything to qualify. Let me show you how this program actually works. There are few ones. Which one fits for you? It depends on the situation. There are three main programs for this type of borrowers. Program number one, asset-based lending. With 40% down, they will lend you up to $3 million. If you have 50% down or more, they can go up to $10 million. No tax returns. It qualifies based on assets, not your income. You can purchase or refinance your primary home, second home, or investment properties, and all at the same price. We underwrite it in-house and fund the loans in-house. This particular program works perfectly for international borrowers. You can just arrive yesterday and get a loan today. No FICO, no credits required. However, you cannot beat bad credits. If you are CEOs, celebrities who really value your privacy, this is the loans for you. You don't need to show any incomes to qualify. Program number two, bank statements programs. It works specifically for business owners. This particular program qualifies based upon your 12 or 24 months bank statements deposits. Not what you reported to IRS, but what it shows up on your bank statements. Your write-offs stop costing you the homes that you love. This particular program, it's purposely for investors who's looking for investment property. The loans qualify based on the actual income generated from the properties, not what your personal income. As long as your property is generate incomes to cover the expenses, you are approved. Even the property does not generate sufficient income to break even, if you have significant assets, it will compensate that shortfall. There's no cap of number of property owns, no income verifications. If the deal is making sense, we close it for you. The third program is DSCR loans. It is purposely for investors who's purchasing investment properties. It qualifies based on the rent income. It's not based upon your personal income. There's no caps on how many properties that you can own, and there's no income verifications. This loans qualifies based upon the rent that you receive to cover all the expenses, which includes the mortgage payment, the property taxes, the homeowner's insurance, and HOA fees if applicable. If the deals is making sense, we can close it. Which program fits you the best? It all depends on what are you buying, what type of assets are you holding on, and what are you trying to accomplish. We can get this figured out in a 15 minutes conversations. The banks say no. It is not a verdict based on your wealth. It is a verdict based upon their tool. The right lender has different tool. It is built for you. Want to know which of these fit your situations? Book the 15 minutes call. The link is in the description.